All right, folks. Welcome to this week's Forex commentary and market review. And a long time no see. I got lots of text and messages, which I really appreciate. It's not like anything was happening to me. I just could not post. In fact, I've tried making a commentary like twice last month, but as soon as I'm done recording, trying to edit the video and stuff like that, I end up not posting, and it's for a number of reasons though. But one thing is, I was, I am not even I was. I'm still exhausted from social media because these days it's been not in the internet, and I just want to remove myself. Now, apart from that, on the market's part perspective, the market is a mess. I mean, you might look at these candlesticks on the monthly time frame, especially for the past 4 months, and say, "Oh, this candlesticks seem very healthy," and it's not always as it seems on the higher time frames. Okay, if you're participating in this market on a daily basis, you would understand what I'm saying exactly, and it it didn't mean that the commentary, just one commentary, would not be enough. And I know that I do a lot of follow-ups during the week, like posting my charts on Twitter, sometimes you know profiling the market for that day and stuff, just so that somebody can learn something. And why it's different now is because these days I've gotten even busier and I spend a lot of time doing a lot of things, and you know, trying to be who I am online and who I am offline. Everything is just, it seems like it's too much for me, and and that's why I just went quiet. Okay, and um. Folks message me, ask me, is everything all right? Come on, I've been trading for going 7 years trading already, and trust me, I have a lot of experience under my belt, and I don't think it's not what you're thinking, and I'm not even sure what you're thinking, but I'm very, very fine, really, and I've been doing very, very great, even greater than I have been for, at the start of the year. You understand? So yeah, and talking about dollar index, okay, because I don't want to say too much, just go outline. This is a monthly time frame, and this is my monthly time frame from like, say, say 3 months ago, right? Because we had this inversion fair value gap here, and we have this breaker here, and the market traded above, July's candles high, and from the July commentary, you notice you note that we're trying to aim for sell side liquidity here, and the market traded into sell side. And our first rule of thumb is that when markets pricing to an objective, you want to wait. Why do you want to wait? Because you want to understand if the markets have, any, maybe there's a propensity to want to return back into the range or make a continuation. And a market that is essentially in consolidation, I think that that market would favor you even waiting, unlike, markets that's pretty one-sided. For example, after this swing high formed, you anticipate markets trade into a discount below sell side, previous monthly low, then deep discount, fair value gap here, and stuff like that. But market is traded into objective. We've traded into this low, taking sell side here, taking sell side here, trade into some consecutive downward candle if you check the 3 months time frame, and markets is essentially in consolidation. Okay, and the markets being in consolidation means you have to be very, very careful, especially when markets trades above old highs or lows. For example, you note here when market trade into sell side here, June's low, the market reversed. When market traded above July's high, market reversed. When markets trade, that's how consolidation is like. And currently, I'm dealing with noise. That's very interesting. Because I cannot record the commentary at midnight because I'm gonna be busy at midnight, and I'm doing it during the day, and there's a lot of noise. I'm gonna continue regardless. Okay. So what do I think the dollar index is likely to do? Mind you, for the past couple months, say 4 or 5 months ish, there's been like an asymmetry between data, that's the COT hedging program, and market structure. Okay, so market structure has been literally in consolidation because all of this price action you can see is inside a tiny a monthly range. I don't want to call it tiny, okay, because there's a lot of dips, and the markets aren't responding to data. And just recently, last week, we're seeing the United States government shut down some form of political protest or something because two parties are unwilling to come into an agreement for policies for the country and stuff like that. It's just a mess. Okay, it's just a big mess. So everything this year has been, aside from the early portion of this year, of course, I think from the later half, from June, July, market has been very soggy. Okay, so I think dollar index is bullish based off of this monthly candle closure. That's last October's no, this September's candle's closure, right? Because when you look closely, you'd see this candle closed inside the range of August candle, and after taking sell side liquidity here, and of course the markets are in a discount. Okay, and you can see the heavy rejection here. So down to the weekly time frame. Okay, down to the weekly time frame, you can see markets took a sell side here, and look at these two consecutive down close candles after the market took a sell side. This is the bullish auto block, and it's the change in the state in delivery, okay, on the weekly time frame. But then again, we also have a swing low priced in here. And whenever I see swing low like this, I expect the markets to trade into the third candle's high. But last week price action again was in consolidation. Okay, the market just stayed inside the previous weekly range. So this is consolidation, and market stayed at the key level. So we have last week, which was indecisive. Why am I calling it indecisive? Because it neither trade into the previous candle's low or the previous candle's high. I mean, if it trades below this previous candle's low, I can even be bearish leaning because it means market structure is bearish because they made a high, which could be a total soup, of course, and the market made a new low on the weekly time frame. But this is an indecisive candle, so it means the markets are in like consolidation. So there's exactly not I can the data from last week's trading would not be sufficient to just call out a very one-sided bias. Okay, but one thing to note is that we are at a key level, and you can see this candle hasn't closed below this candle. So we're still at the key level, of course. And I think when you extend this inefficiency from here, if you extend this inefficiency, you can see the bodies of the candle respecting this inefficiency. Let me put some colors here. So you can see the bodies of the candle, all the bodies of the candle just respecting this whole inefficiency. So this is something you want to note, because you understand that the bodies of candlesticks, they tell the story. They tell you where volume is, where the markets are leaning on. Okay, and the wicks just for runs on liquidity and stuff like that. So now that we have that, what's my expectation? What am I thinking? Well, I've looked at Euro USD chart, trust me, and I've looked at dollar index chart, and I can't really pinpoint something because it's really hard to discuss price action like this. But when we go to Euro USD, I think I have something on Euro, and I don't know if conversely I can replicate the same thing on dollar index, because when I see candles that are indecisive and markets at key level, you have absolute two things that can happen. We could see the market start expanding at the opening of the market on Sunday, or we can see the markets first try to reach for sell side here. Now the markets can reach for sell side or buy side on Euro USD and fail to reach for sell side on dollar index based off of this current market condition, and that's an SMT divergence, of course. Okay, but my expectation on dollar index is see if the markets can trade into sell side liquidity here, the previous weekly low, and because we had a bearish candle closure, so I'm sort of like bearish leaning in the early portion of next week's trading. Okay, I'm bearish leaning in the early portion, even though I'm bullish and I think the drawn liquidity is 98.83 okay, but I'm bearish leaning because we had a bearish candle closure, and I think the markets can find some kind of strength to return into the previous weekly low, and then we can see if there's any observable price action details that would mean bullish on dollar index. So this is this consecutive down close candle. As soon as the market turned to the sell side, there was a change in the state in delivery. So the week prior, that was 2 weeks prior, okay, I was bullish on dollar index, okay, bullish for the fact that we had this inversion fair value gap here, we had a change in the state in delivery, and the market straight into this level, and we had 2 days of bullish price action, which was very, very very interesting. I'll just put it like that, okay. And now the market has returned into this key level here, and market essentially last week was just in consolidation, okay. Consolidated from Tuesday to Friday. You can see it got there on Tuesday, stayed, then Wednesday, rejected on Thursday, returned back on Friday. Terrible price action, okay. And that's the reason why I can just say the markets can return into the previous weekly low for sell side, because currently the markets are at key level, and when the markets are at key level, and of course buyers bullish, okay, why am I bullish? We saw the weekly time frame, we saw price action on the weekly time frame, we saw price action on the monthly time frame, and now we're seeing market structure on the daily time frame validate upside on dollar index via this change in the state in delivery, okay. And of course we have low resistance liquidity run, and we have this imbalance here that the market could potentially trade into if okay, if the market decides to go higher on dollar index, okay. So we are currently at the key level, so I think the market could potentially just run off quickly from this level. And one of the ways I used to adjust and adapt all of my expectation, because I said I'm bullish on the XY, but I also said based off of last week's closure, we could see the market return first into the previous weekly low. That's something, okay. That's also an expectation, okay. But my first priority first is the drawn liquidity, which on the weekly time frame is the previous weekly high. This high, that's around 98.60, okay. That's the drawn liquidity. Okay, so if that's the draw liquidity, how do I adapt? Because there is where you want to see the market go, there's how you want to see the market unfold, okay. There are 2 different things. You might be right on bias, okay, I'm bullish, but you're probably wrong about how you expect the markets to deliver towards your bias. And that's why during the trading week, I like to take every days in the context of the weekly range. For example, I'm thinking the weekly range ought to be bullish, so if I see Monday close bullish, that's sponsorship in the direction of my weekly bias, because the way I trade the drawn liquidity, okay. And if I'm probably wrong on the drawn liquidity, it's either I take a loss or I don't take any trades, because before I can even trade towards the direction of the draw, first off, I must put in consideration of market profiling. What's the weekly target? Has the objective been met? Do I see a 4-hour time frame change in the state in delivery? Okay, these are very potent questions I want to be asking myself if I want to trade in the direction of the weekly bias. Okay, so that being said, why I said all of those things is that we could possibly not see the market straight into the previous weekly low, but we could see price action in the 4-hour time frame validate the higher time frame bias, and it's not like we have that yet, okay. It sort of like looks like it a bit here, because when you look at it, you see that there's like a shift in market structure here, okay. This rally up, taking all of these short-term highs, it's sort of like a shift in market structure, okay. And markets are essentially back in a discount. Remember the key level here, last down close candle, the order block, okay, or the consecutive down close candle. You can see the bodies of the candle respecting the consecutive down close candle, the order block, and the markets could just expand. So if we say the markets trade higher and closes above this consecutive down close candle, then that's salient to a bullish price action, okay. That's very, very salient to a bullish price action. But then I want to see how this week opened, because I really think of something on the weekly time frame that could possibly happen. So I just want to see how the markets open and how Monday trades, and from there I'm going to just based off my decisions around, Monday's trading. Apparently, the only level I have here is the level from the high time frames. The key levels I'm going to trade off of are levels that would form as the week starts trading. Do you understand? So it's not like there's a lower time frame level I'm waiting for, and I'm putting my long or short position. I'm waiting for the markets to get there. No, no, no. Because markets is very, very subjective, and there are lots of variables. And to help myself to manage my expectations, I've had to think of it in the form of the weekly range, how each daily candle contributes to the expansion or how each daily range contributes to the weekly range expansion. Okay, so go to euro dollar. Okay, on the weekly time frame, the markets took out buy side liquidity here, and the market essentially formed a swing high. Let's put it here. Okay, so there's a swing high forming here. So my expectations for the markets to trade into this candle's low. But last week essentially was, sorry, I need water. So last week essentially was in consolidation. Okay, this is consolidation, and we have all of these weeks, But I want you to pay attention to this week. Okay, this long week. So this is a swing low here, and you can see it overlaps with the rejection block here. So if I'm thinking after the market straight into sell side here, what's like my long-term, a little bit, say long-term target, I'm looking at sell side here and the midpoint of this rejection block. So that's how I'm saying it, because if you check the charts I have on dollar index outside above this high on the daily time frame, you'd see that I have something here. So so transposing that on Euro USD, and that's the reason why I have this level here for sell side liquidity on Euro USD, this level here, sell side. Okay, now how do I think Euro USD is going to trade? Mind you, my priority is to see Euro USD trade to the downside. Okay, that's my priority. Nothing else is nothing else. Okay, and if that's priority for me, I want to see what happens above this previous weekly high. Why do I think so? Because I know for a fact that markets are currently at key levels on on the daily time frame, even on the weekly time frame. And someone asked me, Settle, where is the key level on the weekly time frame? Okay, you can see this candle here, this rejection, this long wick. Okay, this is a rejection block. Okay, it's the rejection block, and this up close candle. Okay, if we take it to lower time frame, you see it's some bearish of the block. Okay, so now that we have this candle as indecisive, I'm thinking, can we see the market straight into the previous weekly high? Okay, because it's indecisive and the markets could potentially, now mind you, I also said that because the markets are at key level and last week was essentially in consolidation, we can see the markets just open lower and continue to trade lower. As simple as that. Now, how do you adjust that kind of price action? Like I said, you're going to take into account each daily range. For example, if Monday trades bearish, I'm sure there's going to be a 4-hour time frame market structure within that daily range that validates a change in state in delivery and essentially the weekly buys. Okay, so on the daily time frame, if you look carefully here, we have this high, which is the previous weekly high, and also you want to see something here. So you can see the markets are currently respecting this fair value gap. Look at the bodies of the candles. Okay, you're currently respecting this fair value gap, and there is a swing low here forming at this inversion fair value gap. And if there is a swing low forming here, even if this is a key level, look at this consecutive up close candle. This is the bearish order block. Okay, market made a retest, ran into sell side here. This was a very, very beautiful trade. Okay, but after the market traded to sell side, markets just returned back into the range. Okay, market just essentially went into consolidation. So um now that there's a swing low here, I'm thinking the market could possibly trade into, this third candle's high, which is Friday's high, but also the markets could trade into the previous weekly high because we took out sell side. Now, mind you, I don't like the fact that I think I'm even like sort of calling a reversal on the markets, but it's what the candlesticks are saying on the monthly time frame on dollar index. The rejection, that's a very strong bullish rejection, and in fact, closing inside, you know, August candles range on the monthly time frame dollar index is very significant for me. Okay, so that's why I'm thinking this month is likely to be bullish, and I'm classifying premium arrays on dollar index that we could see the markets trade into, right? So, but prior to that, you would see that we've like really been bullish throughout this year, literally, and and that's why I'm trying to be very, very careful. Okay, so that being said, we're currently seeing bullish price action on euro on the daily time frame, and even if last week was indecisive, although it was a bullish candle closure, it was indecisive, but it was a bullish candle closure. We could see markets trade into the previous weekly high. Possibly, I don't know. I don't think I'm going to engage that. Okay. The things that would invalidate this bias, of course, is if I begin to see the markets, say if the markets trade above the previous weekly high, and now see like a closure of this upper fair value gap, then I'm done with bearish buys on Euro USD. I'll just stay on the sidelines, or I'll continue trading, gold and silver, because that's like the pairs I've been trading recently. Okay, I've been consistently trading, gold, silver, and all of that, and even the yen too. Okay, like last week, I got trades on GJ, very beautiful trades, and gold and silver, just insane. Anyways, so if I see the candle trade through the previous weekly high and closes through this fair value gap, then I'm done with bearish. I just stay on the sidelines. Okay, I don't want to see that happen. In fact, what I want to see is that I want you to look closely at something. I want you to look closely at something. I said something about, we could see the markets just open up and start to deliver sell side, although we have a swing point forming here on the daily time frame. Now, if you look closely, you'd see that we had a swing high on Euro USD, and if we're bearish, we needed to see Friday's candle trade into Thursday's candles low, right? But look at what happened on Friday. Friday traded through Thursday's high. Now, if Euro USD is bearish, I think we should just see Monday's candle open up and go lower, because if this is the draw liquidity, haven't formed a swing high, and if the markets really are bearish based off of the high time from price action, okay, and market took out buy side first, it means the markets are likely to trade into sell side next. Okay, that doesn't mean the markets will probably trade lower up to this point. Possibly we just see Monday just trade below, Friday's low, and that's it. Then we can now qualify bearishness for Tuesday's trading. Now, mind you, what are we looking at? If this is the draw for Friday, and Friday ran into Thursday's high first, okay, we want to see Monday trade bearish and close below this fair value gap here. You can see this gap, this old inversion fair value gap. So this is what I want to see. I want to see Monday trade through and close below, and then this will serve as resistance for sell side here, and more sell side later on. Okay, we'll discuss those as the week and the times progress. So I would have wanted to talk about gold, but I think I've spent a lot of time, and I don't want this. I never thought this video might be this long. So until the next one, be safe.